And really, when you need a solution, and Mike, you can kind of see that when you need a solution, there's all kinds. Everybody thinks renovation loans are 203Ks. You know, everybody thinks of the FHA when you think of it. But renovation loans can also solve your problems when you have a transaction in progress, and that's what I'm going to try to get into a lot here. But basically, what renovation financing is it's repairs and upgrades that are financed into a buyer's mortgage. So repairs, loan amounts are based on the improved property values. So that just means repairs are not paid out of pocket, they're financed in. Repairs take place after closing, not before closing. And what we do is we take the loan amount, we add the cost of repairs, and we get what's called the acquisition price. And then that's our true, it's not the sales price, but that's what our loan looks like. And our down payment and everything is based off of that. And so when we order appraisals on these properties, we give a copy of the bid and we order the appraisal on as completed value. And that's a big deal. Because you can really add a lot of repairs sometimes when that appraiser is taking into account these items. And a lot of realtors, I think, get confused on that. They're like, how am I going to afford the cost of the repairs in this property? The loans close and fund before improvements begin. So everybody gets paid, seller gets released, gets their money, buyer gets the keys, and then the renovation. There's a renovation period that range, depending on the program, from 30 to 120 days. We hold the funds in escrow, and we give them out like on a construction loan. People, portion of the repairs get done, we do an inspection, they get a draw. And that contractor has specifications when he gives that bid up front to us. We ask him how many draws and kind of to itemize his thing. And the renovation costs obviously are spread throughout the mortgage, so it's not something that all comes at once from the borrower. They can be used for required repairs. That's if the property is not meeting minimum property standards, not complying with code, or we have appraisal requirements. So, and these are some of the examples: roof, electrical, plumbing, termite, mold, painting, ventilation, smoke detectors, foundation repair. These are the ones that can save your deals. So you've got a buyer or a seller, and there's something that the appraiser comes up with and nobody has the money to pay it or get it done. Or you've got a buyer and it's a foreclosed property and it's an REO, not a HUD, an REO, and the seller won't do a repair, but we won't give you the loan if the repair's not done. No lender will, because it's on the appraisal. What you can do, we have lots of programs, and we have one that we were talking about earlier. We have one that's just called appraiser required repair, minimum property requirements, where the repair is added to the loan amount, funds are held in escrow, and it's paid after closing. We also have one that's called buyer or seller, where the buyer or seller can fund it. We take the funds for them at closing, and we still do it after closing. So the loan closes on time. You guys don't have to wait for it to be done, and the underwriter signs off on it. Does that make sense?
Mm-hmm.
Okay. It can also be done for optional repairs. So this is just to upgrade the property because your buyer wants it upgraded, or because you've got the listing and you want to be able to offer buyers that they can do this. So they can do, depending on the program, room additions, kitchen updates, bath remodels, repainting, siding, energy efficient flooring, landscaping. We do have a pool repair escrow that's just for pools that we can do. Yeah, it is pretty cool. And I'll go through all the programs in a minute because we have probably 10 programs. Benefits to sellers. This is nice if you've got a listing. I'm sorry, I didn't wait for you to get in there. If you've got a listing, and I worked with this a little on Molly's, but HUD doesn't like her to put flyers in there. But you can, and we have some cool marketing materials. If you've got a listing that needs work and your seller just doesn't have the money to do the work, you can market it as a renovation property. You can do sign writers, you can do flyers inside, and we have financial flyers, which is what actually Molly and I created, and now my marketing department does them. But we can do a 3-up, so it's got, you know, picture of the house, and it says sales price, and then what if you wanted to do $5,000 in repair, $10,000, $20,000. Actually gives them what their payment would be, cash out of pocket, and compares those 3 options. And then you could, if you want, put a list of what could be done. You know, if you had a contractor that could give you a bid for 5, 10, 15, whatever you're putting. So, you know, Molly's deal when she and I talked about it was that she had properties that it needs it on, but she knows realtors don't want to do them, so she thinks realtors will show the property and just go, like, let's go to the next one where we don't have to do this. But if that flyer's in there and the buyer grabs it and wants it, then they can't really argue with their buyer too much. And so it is a really cool tool. And if any of y'all are interested in that, just get with me and I'll show you the stuff we have. It increases the pool of potential buyers. Obviously, you can sell the house more quickly. Contract less likely to fall through when we've got issues on repairs. And location can take precedence over age and condition. And that just means, and I had a buyer say the other day, you know, I love that neighborhood. Now I can do this. I can stay in that neighborhood and I don't have to be so picky because I know I don't have to spend the money on the remodeling out of pocket. Benefits to buyers. They can buy in their neighborhood. Eliminate negotiating over repairs. This is talking about when you've got a requirement for the loan and all of a sudden everybody doesn't know what to do. You can finance their improvements at a low rate because interest rates are not that much higher than regular, usually an eighth to a quarter point. They can customize the home, get the work done right after closing so they can enjoy their new home. They don't have to spread it out over 5 years as they come up with the money. And enjoy instant equity by selecting improvements that add value. And at the end of this, I'll show you, I've got a little chart that shows you some of the ROI, return on investment of these. Benefits to the realtors. Overcome the challenges of selling a home in need of repairs. Make properties more marketable. Increase your number of buyers. List your homes sooner, sell them faster. Get more listings that other agents don't want to take because you know how to market them. And then as a buyer's agent, show fewer houses, sell more homes. Become the expert, increase your referrals. And I will tell you, my borrowers who have done this program love it. And they love everybody involved. I mean, I had one girl ask me, will you just make me t-shirts? I'll walk around Home Depot. You know, and she loved me, the contractor, the realtor, just because she got this house in Fair Oaks she wanted. It needed about $40,000 in repair. She didn't want to spend the money, but she got to just pick, like she was building a new home, the things she wanted, and she thought it was the coolest thing. She told everybody at her office. So it is good for referrals. It also helps you hold contracts together when there's repair issues. If you're farming a neighborhood and you're doing this in certain neighborhoods, they're great in historic neighborhoods or even in some of these neighborhoods that are like 40 years old, Hollywood Park type neighborhoods. Helps improve the values, helps your home buyers get the dream home, and of course you get paid at closing. You don't have to wait for repairs. We want y'all to know that. Do they require more work from the realtor? And no, absolutely not at all. You guys, and I have to tell realtors, don't get involved too deeply into it. Don't start getting their bids for them. And I don't know, Mike, if you've been helping your guy. You don't. You want to give them some guidance, but you really don't want to be chasing bids around, getting repair estimates. I do that with the buyer. That's kind of the deal is we hold their hand through this. You do what you do. I want them to get their bids up front, and that is your job.
You're hired.
Encourage them, to get their bids up front. And that is the big deal. I have a realtor who just tells them, oh, the rule is once you're under contract, you have to have that bid in 5 days or they won't do the loan. And that's not true, but that's what he tells them because we can't do anything with the loan until we get the bid. I can't get an appraisal. And if I don't have the appraisal, I can't put it into underwriting because I have to have an appraisal to determine the loan amount, the down payment. So I tell buyers, if I get a call and they're looking at a house, get a contractor out there now before you put the offer in. You got to get a verbal. You got to know how much it is. I got to qualify you for that, and you got to feel comfortable with that. And so if they do that and then it goes under contract, it's pretty much a no-brainer that in the meantime, while it's negotiating, they need to get a couple of guys out there or whoever and get that written bid to me within a week. If they do that, they really close on time. You can do a 30-day if people do what they're supposed to. But really, that's your only job is to encourage them on that. Once that's done, there's some things they have to sign. The contractor has to sign. The contractor has to give me. But you guys really don't do any of that. And you have to write in special provisions, paragraph 11, what type of renovation loan you're doing. And that's really it. Your contract looks the same. None of that goes on your contract. You have your regular sales price, regular down payment on the contract. And it's good to help them select smart improvements. I mean, if you get the listing back later, that's a smart thing to do. Realtors' objections. Great idea, but they take too long and never close, or they're difficult and too complicated. And I think we had some little joke we used to put right here, but we make it simple. I mean, that's the truth. We really do all of it. You guys don't, if I can make you not. And our average turn time is 45 days on these, but I've done them in 21. It's just, that's the average, and it depends really, it really, really 100% depends on the bid. I had a buyer who was with a contractor I knew, and she had the bid before closing. After closing, called me and said, I want to go with this other guy. The other guy would never return my calls. He wouldn't get the bid into her. He finally got the bid into her, and this took like 2.5 weeks. Signed our documents. We got ready to go, and then he sent an email to her and I and said he didn't want to do it. And she had to go back to the original contractor. Well, we were almost 4 weeks into what was supposed to be a 30-day closing. So that's what slows them down. But if you just explain that to them and let me explain it to them, and if you maybe have a handful of people you know that are good handyman contractors, that you can tell them, get on it, that's really the key, because the rest of the loan process is pretty much the same. We have one department, and this kind of tells you how it works. I'm sorry, I made this PowerPoint and I forgot I had this here. Buyer finds the home. He chooses a contractor, gets his initial bid. That's the verbal. He, based on the bid, the repairs, and the comps that you guys give him, he makes an educated offer on the home. Once the offer is accepted, he finalizes the bid and the costs with the contractor. The bid comes to Prime Lending. We order the appraisal to show as completed value. We process the loan. Literally, we used to have two departments, a renovation and underwriting. And we got rid of the renovation. They're after the fact involved, but we picked, I think we have 4 underwriters that are dedicated only to doing these loans, and that's all they do. So they approved the contractor, they approved the work, they approved the loan all at the same time, and it cut like 5 days out of our process. And so really that's nice. And we also have processors we hired who just do this. So once the loan is processed, it closes and funds, everybody gets paid, gets their keys, the renovation work begins. Our renovation department jumps in. They email your buyer. They usually copy me and you on it and the contractor, and introduce themselves, tell them what's next, give them the forms they need, and they walk them through to the end when they fund. Once the final work is complete, they do a final inspection, and the contractor gets his final check. You guys have questions on that? So I was telling you we had lots of renovation programs. We have large renovation and small renovation. This page, our large renovation, you guys have all heard 203K, right? FHA, kind of, that's the FHA loan.
What's the difference between the 203K and the Streamline?
The price really, and some of the repairs. The Streamline, you cannot go over 35,000, and you can't do foundation.
Okay.
So if it's either of those, then you have to go to the full. The full, you also have to have a consultant. Not that big of a deal. It scared me when I first heard that I had to do one with a consultant, because I thought, oh my gosh, government consultant, paperwork, headache. We use a guy locally, Mr. O'Connor's been doing it like 30 years. He tends to know every contractor you send out there. He writes up a form, he sits with the buyer, with the contractor, they sign it, and that's pretty much it. And he's just there really to protect not only the bank and FHA, but the buyer, to make sure that the repairs are smart, they're the right thing, and when it gets over 35,000, FHA wants that. Yeah, and then, exactly, and it really is good. He'll give good advice. So those are the FHA, the 203K and the Streamline. Then we have conventional loans. We have a home style and a home path, and the pool escrow goes in our bigger programs, because pools are usually a little more expensive. The smaller programs are on a HUD home. You guys ever sold a HUD? Sometimes they have a repair escrow on there because they know the property needs repair. We do those. The Easy C is a conventional, and it goes up to 35,000, and we used to call it our carpet and paint. That's an easy program where you just walk in, your buyer's been looking at houses, they can't find one, they love this one, they hate the paint, they can't visualize, they don't want to spend money on paint. They can roll that into the loan. It can be as little as $5,000, and they can roll it into the loan. USDA, we do USDA loans with repairs escrows, just like the HUD homes with repair escrow. The buyer and seller funded, I talked about that, and the one below it a little bit earlier. If you've got something that comes up that needs to be done, buyer and seller can either, one of them can fund it at closing and work happens afterwards, or we can roll it into the loan and the work happens afterwards. I need to check the limits on these. I think we recently raised them, but I'm pretty sure they're both at 15,000.
Do you have something that has like a small explanation on these?
I do. On these, I'm going to go through it right now. On the other ones, I can email it to you. I just didn't, I keep you here all day, but.
Yeah, no, it's because we're going to have to leave right now.
Okay.
To review, but,
Well, I'll send you, I actually take that with you, that sheet, Oh, here, I'm gonna give y'all these. Take one of these, and then I can email you directly on some of those smaller
With the
programs
limits
like
on
we
there?
talked about.
With the parameters?
Yes,
of
yes,
okay.
except for the smaller programs, they're not on here. But I can send it to you.
Okay.
These are all on here.
Yes, though?
All right, thanks, guys.
Thank you. Thank you.
So-
Don't you need to clean Absolutely.
How you
Bye.
doing?
All right.
Grab one of those, Mike, thanks.
Just one.
Yeah, I didn't bring it up. So on the full, they can go up, on the streamline, they can go up to 35,000, and they can take up to 120 days after closing to complete, and it can't be structural repairs. What can't be done? Repairs, renovations that exceed 35, more than 120 days. Nothing that requires plan specs or engineers reports foundation. And nothing that FHA doesn't allow in either of their programs what they call luxury items. No swimming pools, no spas, nor outdoor kitchens. You can do those on the conventional, but you can't do it on FHA. And you can't do manufactured homes at all, 3 to 4 units or condos on the streamline. And the big thing, I get this question 1 out of 5 deals. The buyer wants to do the work himself, he can't. The buyer works for a contractor, can't. Buyer's uncle, can't. You can't, I can't. Nobody that's associated in any way with the buyer or the loan or the house can do the repairs.
Can you combine two different type loans?
Such as like an FHA and a convention, like
Well, one that where you can add a pool and then something else? Or foundation work and something else?
no. You gotta pick one that allows both. So for example, if they wanted a pool and they needed foundation, they would do a home style conventional. And so common repairs, obviously minor stuff, painting, small remodels, new flooring, patios, porches, roofs, gutters, any HVAC work, plumbing, and weatherization. I mean, those are just some examples. And loan details, it can be 1 to 2 units. It's 3.5% down, just like a regular FHA. They have to have a 640 credit score. There's no minimum loan amount, and the max is just the FHA allowable. Refinance is not going to apply to you guys that much, but in case you want to refinance your own, it's 2.25 is what the equity has to be, and they have to have a 660 credit score. And then on the full, they can go up to a lot higher, up to 50% of the improved value or the appraised value. So, I mean, that is the improved value. So I have a little calculation sheet where it's a little confusing because it's FHA, but I can put in there the cost of the acquisition, the appraised value, and then there's one other item we do. And we work it out, and they can go, I've had them go up to 110% of value if it works out right on that sheet, and they can do that even on the purchase. So it's kind of cool. I had a guy down in Monte Vista do 100,000 in repairs and do a really nice job on the house. Yeah, and it was my first one ever. This was 3 years ago, and he had a contractor I didn't know who didn't speak English, and it was really easy. So, repairs, renovations that require plan specs, engineering reports, or structural changes, they also allow cosmetic, but remember, no luxury items. And they can't go over 50% of value. They can't do complete tear downs. They can't do luxury items. No manufactured homes, condos, 3 to 4 units, and no related parties doing the work. Common are foundation, room additions, kitchen and bath repairs. On the full, it's 1 to 2 units, 3.5% down, 640 credit score. Exact same on the refinance too as on the streamline as far as qualifying. And then we get into the conventional programs. And these are the ones most people don't know about. Do you guys know what home path homes are? No, okay. So home path homes are kind of cool even if you're not doing a renovation loan. Those are Fannie Mae owned foreclosures. And Fannie Mae has them, and they tell you can offer home path financing on it. Typical home path financing without renovation it used to be 3% down. Now it's as little as 5% down with no mortgage insurance at all. Rates are a little higher, but no mortgage insurance. And you can go to their site. I think it's HomePath. It's either homepath.com or homepath.org. I think it's .com.
The houses that I've seen are really nice houses.
I was going to tell you, they're really nice houses.
They're like HUD,
but nicer homes.
but nicer homes.
Because they're conventional limits, so they were
Right.
higher, some higher price. But you can get great deals. I mean, great deals on them. And So they also allow renovation on them, and they have their own renovation financing. So when I talk about home path renovation, it's only on those homes. They're listed in MLS, but you can also go to their website and click around. It's a nice, easy to navigate website. Repairs and renovations have to be attached to the property. You can't do like, maid's quarters out back on the home path loan. Repairs and renovations can go up to $35,000 or 35% of the improved value, and you have 120 days. No detached garages, no pools on home path, no unusual improvements that don't conform to the neighborhood, no manufactured homes, and no family members, etc. Common repairs are landscaping if it adds value, kitchen remodels, paint, carpet, build a deck. And the cool thing about the conventional programs, both of them, the home path and the home style, they can be second homes, and investors can do them too. For both the purchase and if they're doing a purchase with the reno. 5% down on a primary on a home path. It can go 2 to 4 units, but then they have to put 25% down. They need a 660 credit score. It's a little bit higher. Second home is 10% down. Investment is 15% down. So that's really cool because typically, you have to do 20% down if you're doing a regular investment property, and 25 if you want a decent rate. On the home path, only on the home path, you can do 15% down on a straight home path or a home path renovation. And they have a $50,000 minimum loan amount and no mortgage insurance.
And the rates are?
The rates are not great. I mean, they're not horrible, but I would say if I'm looking at a regular conventional, let's say 4.625, they're probably at 5. But there's no mortgage insurance.
Right.
So it makes a difference. And their rates are tiered. If you've got somebody on that lower tier of credit, it's crazy high. But if you've got somebody who's in the 700s, it's not so bad. And if they bump it to 10% down, it's much better. The home style, unlike the home path, can be on any house, but it's a conventional program. The repairs have to add value, conform to the neighborhood in 120 days. They can go higher on this program. This is really like an FHA full, but it's a conventional version of it. So they can go higher. They go up to 50% of the improved value. No manufactured homes. They can't go over 120 days. No family members. They don't have a ton of restrictions, really. It's 5% down on a 1 unit for a primary, 15 on a 2, 25 on a 3 to 4, and a 680 credit score. Credit score is a little bit higher. There's no minimum loan amount. Second home is 10% down with a 700 credit score, 30,000 on the loan amount. And investments 20% down, because remember, this is not a home path property. They're doing a regular loan through a regular lender. It's not going to be Fannie Mae owned necessarily. 20% down, 720 credit score, and a minimum 50,000 loan amount. They can do roof repairs, new air conditioning, plumbing, flooring, painting, pools, landscaping, outdoor kitchens, pretty much anything on this program. And gee, I didn't know I was already at the end. But I guess I'm at the end. That was our last program. So this is the chart I think I was telling you about, which is really cool. It gives you the best return when you're renovating a home. I can email this to you guys. It's also in your book. But most people tend to think, kitchen remodel? And this goes, they all show a fairly good, other than a master suite upscale edition, you're only getting about a 64% return. But on a bathroom remodel, a mid-range, that's the highest, over 101% of your money you put in return. Minor kitchens next, better than a full kitchen. And I can almost attest to that. I don't know if you've seen that with your listings, but my neighbor remodeled her whole kitchen, spent a fortune. I went in, left the old cabinets, changed my countertops, changed my sink, changed my appliances, and people went crazy for it. And I guarantee when I listed it, I got my full value out of it.
The listings that I talked to before, they've watched TV programs, and that for every dollar they put in, they expect to get $3 back.
Yeah, it's
and
not going to happen.
Change the channel.
So you need to give them this.
Yeah,
You know.
change the channel.
Yeah, it's true.
Where do
But
you get your numbers from?
our Prime Lending
Are they local?
actually, no, they're nationwide actually. Prime Lending went to, I'd have to ask, but it was some investor website where all of these were posted for lenders who do these loans.
How old are the numbers?
We did those in November of 2013, so they're not that old. And really, that's it, guys. Do y'all have any questions? Anything you need? Anything you want?
College.
So if you're doing investments and you're doing money.
Yes. No. That's the key. You can't.
or a relative.
Can't be a relative.
So you
Yeah,
divorce
but-
your wife and she's an
They could be your
ex,
friend.
Yeah, that's the only way I've been able to save money.
Is it-
The 10,000 for the kitchen,
Yeah.
you can completely gut and redo a kitchen.
For 10.
Oh, yeah.
Oh, really?
Oh,
If
yeah.
you do it
A lot
yourself?
less than that, yeah. What you do, you get these, the off-the-shelf cabinets from Home Depot.
Yeah.
Sand them and use enamel and a sprayer, and they look like the
High
cabinets
end?
that are in my house up there.
Nice. Well, so if you're gonna do it for 5 though, you could probably maybe swing that on your own. I mean, I know it'd be easier to put it in, but unless you can get, your friend to be the contractor.
Yeah, unfortunately, the renovation, is the same as mine.
Yeah, that'd be kind of hard. And I didn't go into too much detail because I don't feel like I want you guys to be total experts, and I don't want you to go crazy trying to learn it. I just want you to know you can do it, why it's good for you. If you have a scenario, call me, and I'll explain it to you. And then as you do them, if you start doing them, you'll want to learn more and you'll learn more. But you've got enough to know that you can say to somebody, hey, we might want to try this, and I think there's a program for it, and let's just call Shelley and talk to her about it. And then know that I'll walk you through it, but you won't have to really be that versed in it. Like we said, we don't want you to be the expert. I don't want you to run all over town getting bids and hate the program. So.
What's the minimum on those?
The maximum, you mean, or the loan amount? Well,
Minimum.
But if I wanted to do just the common house and the kitchen.
I don't think we have a minimum on repair. I don't think so. I've never seen it posted on the guidelines or anything, so I think you're okay on that. And so you could do a refinance on either an FHA or a conventional and just refinance that in. You just have to get a contractor. I mean, I did one that was a purchase, and all the girl needed was, it needed a stove. It didn't have one, and she wanted carpet. So I think we went maybe $5,000 for everything, and she went separate, which I usually say try to get just one contractor because it's less. There are some additional fees, about $600 more in fees, but there's a fee per contractor for every title update. And so it's easier if you just get with one contractor. I tell most people, especially if it's a big job, because that's when people get in over their head that don't know what they're doing and everything just kind of starts falling apart. But she just got one contractor who did the stove, who went and got it for her and put it in and didn't charge her much, and then she did the carpet. And it was like super simple, and like I said, she spent less than $5,000. So yeah, you can do that. I do them, and because we have all these foreclosures now too, I do them sometimes for just like a stove and a dishwasher, because we got to get it in and the bank won't do it. So it's an easy fix. And if y'all want anything, y'all have my card, my email's on there. If y'all want anything like me to send you some information, those lower